Why most people get it wrong, and how to position yourself correctly. Most people ask the same question. What will happen to the market? Will prices go up or go down? Will this be an opportunity or a risk? It sounds logical, but it is the wrong question to ask. Because in uncertain markets, the problem is not prediction. In fact, the problem is in preparation. And the people who struggle most are not the ones who guessed it wrong. In fact, they are the ones who were prepared for only one scenario. Markets do not move randomly. They move within limited set of paths, not infinite possibilities, but structured directions. And once you see those directions, you stop reacting and start positioning. So instead of predicting one future, we map the full structure, 4 realistic scenarios, and more importantly, in each scenario, how you should position yourself inside it. Because the same market creates completely different outcomes, depending on where you stand in it. Whether a buyer with liquidity, or an owner of a ready property, or someone holding an off-plan property. They are not playing the same game. So for each scenario, we answer 3 different questions. If you are a buyer, what is the move? If you are ready property, what changes? And thirdly, if you hold an off-plan, where is the risk and where is the opportunity? There are only 4 realistic paths from here. Rapid stabilization, slow cooling, short-term shock, and structural shift. Everything you see in the market will fall into one of these scenarios. Scenario 1, rapid stabilization, where the system comes faster than expected. Confidence returns and liquidity flows back. Developers regain control, and the flexibility you see today starts disappearing. For buyers with liquidity, this is a closing window. Your advantage exists, but only briefly, and you act on clarity, not hesitations. On the other hand, for owners of ready property, this is positioning, and demand improves. You hold into strength if you're not exposed or under pressure. And for the off-plan holders, this is recovery. Momentum start returns, and early exit means losing upside. Scenario 2, start cooling. No escalation, but no clarity. The market becomes selective, and not everything moves equally. Volume slows, but structure remains. For buyers, this is a discipline phase, and you buy quality only, not activity. On the other hand, for ready property owners, liquidity becomes selective, and pricing must reflect reality, not expectations. But for the off-plan holders, this is patience, and short-term exit becomes harder, and project strength becomes critical. Scenario 3, short-term shock. A sudden escalation. Fear increases, liquidity tighten, distress appears, but not all discounts are real value. For buyers, this is an advantage phase, but only for the disciplined capital. And for the ready property owners, this becomes a liquidity decision, and you should hold if stable and exit if exposed. But for the off-plan holders, this is pressure, and cash flow becomes core variable. Finally, scenario 4, a structural shift, which is a change in direction, not a phase. Demand reshapes, and some assets weaken, while others strengthen, and the system reorganizes itself. But here, for buyers, this is capital repositioning, and you should move towards long-term survival. But for ready property owners, this is portfolio reassessment. Exit weak and reinforce strong. On the other hand, for off-plan holders, this is full audit, and not every project deserves continuation. The mistake is not choosing the wrong scenario, but the mistake is being prepared for only one. Same market, different positionings, and different outcomes. And this is not about predictions, it's about positioning. And at Archi lens, yes, topics may change, but the lens remains the same.